Hello, hello, hello. Oh, there's a voice I recall. Is that Bridget? Oh no, that must have been Becky.
Yeah, I think it was Steve.
It, well, yeah, you sound like Bridget. Yeah. Whether that's a good thing or not, I'm not sure. But yeah. Right. Okay. We just finished off the gold bot session and run out of time doing the back testing on a potential next generation of bots. So anyway, so there we go. Uh, what am I doing here? Just closing some of the screens down. I'm doing the bot testing on something else as well. So I'll just turn these off. Yeah, right. See what you mean. What Pepe was saying about adverts, well, we're kind of running live. Just make sure the live stream's actually running. Yeah. Oh, I'll not put my picture up on my video, but that's a good thing. There we go. Right, let's get going. So, right, all right, back Sam. Yeah, right, okay. So I'm running. Just for your heads up, the guys in the from the gold room. Um, I'm running that testing now. Hi, Kev T. Hi from the UK. I'm in the UK at the moment, so that's great. Thanks for being on. Excuse me. So, today is a special day. Every day is special in this room, but today's a special day. It's EOM, end of month. And at the end of the month, we have some quite interesting trades that we can get involved in. It starts very early with the ASX sell-off into the end of the month where um, pension funds and other funds all sell off. So we hammered the ASX this morning for 4 to 5%. And into the afternoons, we've got an EOM on the FTSE, on the Dow, and on the DAX, as well as normal trades that we do. So, because we're focusing on opening bell, I'll talk about those things a little bit later. So, the oh, I'm not clear. These were yesterday's. Um, this was yesterday. That was the previous day's closing gap, and that was yesterday's closing gap that we hit. So today's closing gap after the Magnificent Seven reporting, markets going up, shooting back down again, and now settling flat. We do have from this top to bottom, we have a 68% retrace, and I'm expecting on the Dow, especially what we call a short squeeze. The market is positive, but you will see tonight at 10 minutes or so before the close, the market will sell off like this. And there's a strategy we have for selling that market off. But we want to close this gap now. So let's go and have what's the ATR? Just check the ATR. ATR, let's get the daily edge up. The ATR is what's the 15% ATR? So we're looking at least 80 pips. That doesn't look like 80 pips to me, but let's see what we can do. Let's get my ruler. So the closing gaps here. Oh, flipping heck. We could do because we are trading live, we could do a little cheeky one. That's a double bottom and a fractal structure. So we could, I looked at that and didn't 40 pip. We could do a 40-40 for a break of that fractal structure. I'll put the fractals on so you can see there's a fractal structure. Let's move into the detail in 5 minutes. Can we get a 40-40 into that close? Let's get down to 2 minutes and just have a look at how the market is punching down. So can we get a stop under above these fractals on roughly 40? Yes, we can. We can get a fractal structure 40-40. So we're going to put a fractal structure on at 40-40, going against the trend. We're going to be on a 40 pip stop, 40 pip target into the closing gap. And this is a gap that's not been traded, uh, no cash trading. So that's why we call it the gap, because the market finishes at 9 o'clock at the moment, 8 o'clock on the night UK time. And what we're looking for is the market to come all the way down into here. So we're looking at 47,562.5, and we're looking at our stop being above. Now, this isn't ideal by any stroke of the imagination. The ideal is to be a minimum of 79 pips away to give it that, because we've got a high average true range move. So in this one fell swoop, if the market opens, then it is going to be negative. If we break that fractal structure, then the market's just going to come boom, straight down and close that gap. That would be nice. The risk is on this, when you're looking at the pivots, there's no real pivot risk. The pivot is all the way up here, daily pivot. Between where we are now and the only major pivot is the close. So really, from a technical point of view, if this market breaks this fractal structure here, there is nothing to stop the market coming down to close that particular gap. The issue that we'll have is a lot of retail traders don't have a Scooby-Doo about the cash pivots, and this is what they see. So they might start buying into this dip thinking they're getting value, or into this dip thinking they're getting value. What we do have here, if you look, we've got a very, very loose head and shoulders on the 2 minute, but 2 minutes no good to use as a pattern, really. But yeah, so this could be quite good. So we're going to save that. We've got 7 minutes to go. And what we're looking for is market to click in and come all the way down into the closing gap. And we'll put the closing gap up. I'll save that view. And now we'll nip out to the S&P. Right, S&P, well, got some fantastic. If the clause is a structure here, we've got some potential nice movement and quite a high target to go for today. The issue we've got again, don't forget, it's the end of the month. The FTSE itself, I think it's primed to actually. I said it would not go very high today. There is 5% profit on the table for this month, and the pension fund managers are going to want their bonus. So I would expect a bit later today, we might get a squeeze of the FTSE to then short it all off so they can earn a nice bonus on 5% plus for the month and pat themselves on the back on what a good trader they are. Similar to the FTSE is the Dow. It does the same thing. It gets pushed up, pushed up, pushed up, and then Wall Street gets sold off as well. Not so much on the tech Nasdaq because that's been already primed by everything that's going on, and especially the Nvidia's taking the floor and all that one with its 200,000 chip sales. So I'll talk about these crisscrosses in a minute. So my view, I'll talk about this in a minute. Right, let's get this into 15-minute view. I did this morning. It was a game of two halves, really, football. We really wanted the market to come up to an R3 because we're on a breakaway above camera breakout long. Just explain this quickly, just to remind the room and maybe give people some oversight in the American markets. Market will come back up, should go up to around about R3 and then sell off to camera breakout long. The other thing is the market will come down and break through C-ball to the closing gap, which is here. And then the market will come off and hit this closing gap. This is a closing gap from yesterday. It was not day before yesterday. It was not closed. you can see how the market makers have pushed this market up to try and get the closing gap closed in the futures. And the only reason that we can you can close the gap in the American market in the futures in so long as it's done 1 hour before the market opens, which is the trading time. Um, the US market opens and the spread shortens, reduces 1 hour before the actual open at the moment, 1:30. So that will be 12:30 UK time. So 12:30, you can see in the futures it's trying to push up. The issue we've got here is the futures will be the futures are relevant, and in American markets in particular, if we get up within 3 pips of the closing gap, which is 68.90, and we're 68, it's done it more or less 3 pips, hasn't it? It's just gone enough to close that gap. So there's no hole in the market there, which gives me a little bit more confidence that the market, now there's not this magnet up here, the issue we've got is this ceiling, which is now a floor, Camarella breakout long. When the market opens above Camarella breakout long, C-ball, which is a Camarella breakout long R4 pivot, the market is more likely to go to the top side than it is to the downside. That's an issue. Obviously, I'm talking too quickly or being boring because everyone's leaving the room. Never mind. So we want to be away from the gap. 10 pips ideally. Perfect if it was 21. And how far are we? Well, the perfect storm would be breaking. I've put an order in here to sell 68.54, coming down into the close with a 23 pip stop, which could be 21 pips to be fair. When I put 23 in because 21's the 30% ATR plus some spread on the futures. So that's why it was 23. There's no reason to think that we should really change that at the moment. You could do in the room, you could do a Clint Eastwood trade at the moment from here to the close. You'd have to have the stops above R2. That would be 31 pips, and you would come all the way down into here. So you could do that now if you want to, if you're feeling lucky, or we can wait for the market to tell us it's going to come down. So kind of prefer to wait since we've made a lot of money this morning already. And the gold bots again in and out. We'll have to have a look at gold as well, see what we're going to do after the market opens. So let's just put the account up there and have a little look at what's going on. Wall Street's already clicked in. So we're interested in this coming down. So let's just look at what this needs to be clicked. Wall Street's already clicked. So let's go and have a look at Wall Street with a couple of seconds to go. Oh, that spike just it was a vicious spike, that one, wasn't it? We've been pillaged by a pip. And that's the close shutter, I would think. I can't believe that just happened. That's trading for you. 47,601.4. We got stopped out for less than 1 pip. Slightly irritating. But never mind, that's trading for you. So you can see how the market runs for the gap. And it's running for the gap now. You wouldn't try this for a second time because there's no pivot protection anywhere. the market function is to close that gap, and it's gone and closed the gap. And that was very fast. That was 1 bar, 1 minute. So there's our gap illustration trade done. It's a shame I was done by a pip, less than 1 pip, 0.6 of a pip. I was done. Let's not dwell on it. I'm not happy. Let's not dwell on it. Oh dear. Right. We're not going to go along on the actually thinking about this. Let's just run this back and you can look at the logic, but you know what's going on. I'll just turn these pivots off just for the moment. From a technical point of view, we're bullish on the trend and bearish on the price action. The reason we're bearish on the price action is because we're trading under the 9 EMA. We are day traders and we're interested on the market open on the next 4 hours. We're not interested what's going to happen for the rest of the full day because we're day traders. We want to be in and out of the market. So, and we never use the signal on a 4 hour. We just need to get that helicopter view of what's going on before we dive into the detail. The detail in the 1 hour, we always need to be trading above the 200 EMA on the 1 hour. So we're still bullish. And as you can see, the 9 EMA, I'll turn these fractals off a moment. The 9 EMA here, we are now price action positive. So the market is positive. And this bar here will be a fractal. Let's just jump into the 15. This is where we trade in at the 15 minutes and lower. Into the 15 minutes, you can see that we've got a nice fractal here on the 15 minute. This is a 61.8 Fibonacci retrace on the 4 hour from the market moving up. A retrace from this bottom. What can we do on this? What can we do on this? I'm just thinking of what can we actually do. I'm thinking of the market tonight closing. What can we do? Let's just take these off for the moment. And let's go up to the 1 hour. Is there some structure here that we can look at? We can use. Oops, I'm just accidentally putting stuff in. All right. It's right on the balance on the 1 hour. Don't normally, after the gap, we don't normally trade the Dow apart from market inefficiencies and market function like this evening when the market was more than likely going to sell off. Let's put these cash pivots on an overlay. We've got the pivot boys that will want to buy. People have sold from the pivot coming down. And this will attract buyers, that's for sure. I'll just mark this up just a wee bit so we can kind of have that as a focal point. I would like to trade I'd like to trade with the trend and with the market moving on the price action. So there is nothing to see here. So I think what we'll do while we're live, we're gonna put an alert up by the daily pivot, and when the market comes up to the daily pivot, then we will give it some. We will on the market. I will on the market. Good old IG. You can see what they've done again. Why can't they get the charting right? That's it. Let's go back. It's the graphic drawing sometimes goes a bit skewy. 'Cause, 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 'cause Into 2 minute looks quite interesting. Market's positive on these fractals up here. 1 minute fractals. 2 minute fractals, I mean, but the lowest I'd go on the Dow would be 5. Or don't want to be sat below the daily pivot. So we're just going to have to sit in our hands there and wait. I'm going to move quite quickly, so I'm going to put an alert on this potential fractal breakout there. Let's go and have a look at the S&P now. Right. Having closed that gap, there's the S&P is getting towards an area that we're interested. Breaking out through C-ball would be nice. The issue we've got is C-ball could also be a bounce for the guys that understand the C-ball and stuff. The pro traders and institutions might be looking at buying here to get that final squeeze up to then sell off. So let's just go and look at what we've done from this morning. We did say on the end, right? Okay, so this was the closing gap. Did the closing gap this morning? That won quite nicely. We did say on the edge to where is it? Where is it? Buying S&P 500 gold. Here we go. The DAX. So the action plan that I published this morning just after 7:30 a.m. was to close this gap up here for the gap close. And there's the gap close. So the gap close has been done. And then the market ideally would have continued up and we would have sold it into Camara breakout long. If the market broke down, then we'd have a target into Camara breakout short area with, if you had to put a number on it, it was 23,997. So the market did not get the Friday feeling. It just come off. It's a bear market at the moment. It's a bear market because it's trading under the 200 EMA on the 4-hour. It's trading under the 1-hour 200 EMA. And for a day trader, that's bearish. Today, this is quite nice for tonight's setup. Quite interesting for the guys in the room. All right. Hi, Pep. Hi. Hi, Pep. Thanks for coming for that. The lower we can find the DAX today, the better it's going to be for Monday to trade. And it could be a bit of a monster trade, actually. So if the DAX can stay under C-boss and then drift down a little bit further and then close not too far away from here, and then have the American markets pull it down after hours, that would be our nice, down into 23,950 area. That would be a really nice area for the market to trade up from, even though it is bearish. There is a particular market function on the first trading day of the month for the DAX that we take advantage of, and we can make some money of it, regardless whether the market's bearish or bullish. The other thing, remember, if we, what I said this morning in the live room this morning, is the DAX has a great habit of rejecting at least 50% of any of the low touches. You can see here, it's a big habit, and knowing that habit is very useful for a day trader. So we're just going to put some alerts on this. If we can get this to flash down a little bit further and be nice and low, we can get positioned this evening ready for the first. So the FTSE is the one that we're going to be trading. I'm going to be live this afternoon, and I'm going to be live from 3:30. If anybody wants to come on 3:30 in the room, we're going to sit and wait and smash the FTSE to bits into the close, just to show you the logic where we're coming from. Let's just bring this up a bit. Let's get into a daily chart. So you can see here, if we get our ruler out and we look at the beginning of the month, October, September, October, there we are. Market opened here. We are currently trading about 4.5% up, 5% up, let's say 4.5% up. And the market has been as high as 5% up. All that profit for this week, for this month, sorry, it's usually the pension fund managers get paid on, how well the pension funds operate, and it's not uncommon for them to either cash lots of your pension money out, or part of it, to turn a material profit so they can get a bonus. And with this being a Friday and the end of the month, and coming up to the Christmas period, people want the rupees. So we will see the FTSE ideally trade off. Now, one of the things I did say this morning, we've got an open gap here. The gap has not been closed. I had a very shallow target today. I had no faith in the FTSE staying up today, because of the way the market function works on the end of the month. So that certainly is an issue. And what I'd said to the guys in the room this morning is, if we're trading around the daily pivot or above, it'd be a really good way to short. But the FTSE may be starting its run now. But it is too early to do anything, because if we have a short squeeze on the Dow is really connected to the FTSE quite a lot. And you'll find if the Dow goes rattling up, it'll pull the FTSE up or stop the FTSE from coming down. The only thing I can see here is, is the market starting to run off? If the market is starting to run off, is this because we've got crude oil coming down? Let's just go and have a look at crude. If crude comes down, that will help the FTSE come down. No, crude's going to the top side. Right. So it's not crude, it's got to be the banks. So let's have a look at the banks or pharma shares. Oh, mixed bag. Some of the big boys. Yeah, Lloyd's is flat and slightly up. No, there is nothing on. Right, so there's nothing to keep the FTSE up. Everything's flat and being sold off. It's a shame. I was hoping to get a really good sell-off. But the thing that we have an issue with is it's very early to sell. Alert triggered. Very early to sell. But there we go. We'll wait, see if we can get a 1-to-1 or a 1-to-2 later. We'd like to see this market pull back on. But under CBOS, it's a really negative when we've got trades under the CBOS. I put an alert that if we miss a trade, then you know what, we miss a trade. That's all there is to it. You got to let the trades come to you. Do not chase trades. There we've got the DAX coming down even further. Gold being verified, going back up, and I've got BTC, but we're not looking at BTC live, so I'm not bothered with BTC. Let's look at the US 500. That's a verified alert that's just gone off as well. I won't bother with BTC. Let's just go and look at the US 500. That must be the alert that's going off. Yes, we've been that's the alert for the C-ball, and we're now triggered in a short, and we're looking for this to come down and make us some rupees. Just gonna look at the commodity charts. I'm looking over this way for the simple reason I've got 4 screens in front of me, so I can keep an eye on a multiplicity of things and price action. Right. We've got gold hovering around at 417. The perfect buy would be at 4,000 and touching back up to 430, but when we've got the markets coming off. Oh, hi, Hayden. Didn't see that. Right. Greg's is running a little bit flat. Bitcoin's up a bit. This is doing nothing. So what we've got here, just to explain, game of two halves around this, camera breakout long. Some people will be wanting to buy camera breakout long because it's the base on a breakaway and it's the end of the month and people will be trying to buy this to push the market up, ideally to go to 68.90, which is the closing gap from the 30th of October up here, and then sell it off later in the day. The other mob will be trying to close the gap from yesterday. The issue that, can anyone in the room tell me what the issue is? Between, we've got this trade here, breaking, camera breakout long, we're going to close the gap. Can anyone remember what the big issue is?
The daily pivot, Steve.
Absolutely dead right, yeah. The I don't know if Mickey's on. We're affectionate name for Mickey Long. I won't say his full name, but he cannot help himself but buy the S&P, and the S&P is festooned with Mickey Longs. Any excuse to go and buy it, and there is a big pivot following on the S&P, like there is on the FTSE. Is people will try and defend their pivot. People will go and buy the pivot and put the stops under the swing low and go for a one-to-one trade or better. And they'll do that every single day. And they won't do too bad doing that. And it's a very easy trade to do. And it's just a matter of buying the pivot or looking for a reversal off the pivot would be the perfect storm. So although we're trying to close that gap, we do have a big risk in front of us, the pivot boys. So what we're going to do, if C-ball is not bought and the bears continue to try and, market makers are trying to close this gap. They've already been up to close this gap. In the futures market, I guess I did say we could consider that close. So there is no real need to go all the way back up here, apart from the Mickey Longs wanting to buy off this bottom plate here. And then the next set of Mickey Longs at the daily pivot, and then the fade of the fill Mickey Longs down at the close. So we need to battle our way through all this lot and be on the side of the market, which is the market makers. But you can see this is a closing gap. The market does leave closing gaps at the moment, and it's left a few here. We've got one down from the 27th as well. So we just tentative on the last trading day of the month because markets generally get squeezed up and then sold off.
Alert triggered.
Right, where's that other alert then? The FTSE. Ah, Right. So we want to do the breakup of the FTSE to sell it off later. Have people got on board? Right. So we kind of CBOS has been defended. We do have a hole in the market, the closing gap. It would be lovely, because these are recorded, to actually have a recording that show people what happens live. Market coming up to the close, ideally a bit higher, and then at 5 to 4 to 5 past 4, the market selling off and coming all the way back down as a minimum. That would be really nice to see. It's okay talking about this, but no one believes anyone explaining it. Everyone generally likes to see it happen for themselves. Just going to have a quick squeeze at the futures. I think I'm going to defend the futures position, guys, and move stop to entry on here. This would be the ideal position to actually buy again. The market did go up quite nicely. Let's go and have a look at the real deal. We'll put this back to the FTSE. So again, I would buy above the daily pivot. We don't want people selling the pivot again. I'm going to put an alert up here. Save that. And we want to be buying around the 4,000 level on gold. Oh, it's all written over. We're writing all over it still. This is from the gold session. So, right, 4-hour extensions are overtaken by events now, I think, aren't they? Are they? Let's just have a quick look. No, they're not. We're still intact. So we've had a 10-11% pullback on gold, and that's what we're talking about this morning. Gold's has been up 68% this year, and I think our bots ranging from after the pullback, I forget now, 50-60% up this year to 80% up, and there's 4 of them, so they've been doing particularly well. The thing that's caused the issue is can we turn some of the objects off? Is this big pullback? We've never had one for the past 2 years of this nature, this size. The market really has come back, and I think it's about 10 to 11%, 11.26% into the 4-hour, which is that's you can see clearly here the market coming off. There's very loose head and shoulders there as well, and there's a pattern there, the M for murder pattern, and that pattern, can I write it in without everything coming off? I've got a different annotation pen on here. Can we draw this in? Is that a vanishing pen or not? Yeah. So here, we've got the M there, quite loose, but nevertheless, an M for murder pattern. And what you want to see, a target is the same distance from the top of those peaks to the M. If you then bring your risk to reward ratio, that's where generally the target is for the M for murder. And if you were trading patterns, then that would have been really good. We didn't trade that. I'm just showing you what the potentials were. It's not something that I generally trade. unless it's going with the trend for me. If I'm shorting and find an M for murder, then I'll be all over it like a rash. Same with the W for win. Be over that for a rash if it's if we're going long. Right, Hayden. Right, hey, Unc. I've seen you told someone on your video comments that if the name is closing below or above the 26 on the 5-minute chart, the trend is good entry. Is that a lower TF strategy? TF. I don't know what TF means. We've got about 15 different types of strategy. We've got all sorts of strategies in the room. People might think we're just a one-shot 15-minute bar, but it's called a 926 strategy. We use it for an EB7 trade in the early bird trades, and there is where have we got? So if can I shut all these off? Right, so this is just a quick look into some of the Learning Center. Actually, I could put the Learning Center up. I'll show you the strategy, the outline, just because I get quite a lot of people asking me about, is it this strategy, is it that strategy, as if we only have one or two, and we don't. So this is a Learning Center. 1.6 terabytes of learning, and in here you can see something called strategies. If you have a look in here, the strategies are broken up Q1, Q2, Q3, and Q4 as quarter one, when people are learning quarter one, quarter two, and through quarter four. Or if you've got some experience already, you can just jump in some of them, quickly open them. So in here, you will see there is a 5-day ATR, there's a BBO brunch breakout, CAM strategies, support resistance. There's the DAX strategy, EOM, for instance. If I click that, there's a video that shows you all about it, and a PDF. I'll just quickly open that up. And it tells you about the EOM, the EOQ, how to trade it, how to place a trade, an illustration of the strategy itself, where the stops go, what type of stops to go, what the headlines for risk management, how to increase the risk, how to increase the probability of the trade, and if you're going to reduce the probability of the trade, this is what's going to reduce the probability of the trade. This one works about 75-76% of the time. So the one that you're talking about, I think it's a 926 as a cam trade, as the Dow gap that we did, and the one that I got done on for 0.6 of a pip. There's a 15-minute bar. There's a learner's guide, which is a 15-minute guide, which I give away free, but it's a very small portion of the trade. It's called a 415 reversal, and there's an element to go into it when you're learning, which is the 15-minute bar plus. So you can 15-minute bar already works really well, but if you use this, it works even better. And then once you get really proficient at trading, then you can use the other strategy, which is it's in there, is it? The 15-minute reversal. Where is it gone? Where is it gone? Where is it gone? There it is. The full-blown strategy, which tells you all the markets it can be used on, and exactly what time you should be used on. The algorithms that identify all the trades for you, because we have AI algorithms to find the trades for you. Well, really, so you don't have to. Illustration on how the strategy should work, blow by blow, and what's good, what's bad, and all the different things to improve and different things to go on. I will get to the 926 is another one. Is that in a Q3? Divi FTSE hitting the wall. Aussie USD trades, Divi trading. EB7, which is a 926. Combo rinsing using 15-minute bars with a 5-minute fractal as well. Double extreme gaps, fracker trading, NFP. Where have I gone past the 926? Oh, I renamed it something else. Or someone downloaded it, cut it rather than download it accidentally. There it is, the 926. So to answer Hayden's question, it's can be quite complicated, the 926 momentum. That's what you're talking about, using a 9 crossing the 26, and that can be used on all forex at any time frame. Any time, I should say. FTSE DAX and the NAS are very, very good for 926. You can apply it to just about anything, but those are the ones where you got 70 to 80% plus win rate. And there are quite a few traders in the room that only use the 926. And there are very specific ways to get in, very specific ways to get out. And of course, the 9 EMA is always involved in the decision making. So, yeah. So like this room at the moment, and we're streaming now, we record every single trade that we do on the live room. So we can back everything that we say. We've been doing this since September 2019. And every single day for every single trade that we're live are all recorded. Just example, I don't know what we're up to today. There's the first of the month, and then which is this? This is September. Yeah, it's all September's, including EOQ trades that we did, sessions, you name it, it's all there. So I'll just get that off. No, 926. So I asked because on the 15-minute bar, I missed trades and don't have the capital to set a good stop loss. If market pulls back, I get stopped out. So the 5-minute chart with a 926 and the 4-hour, is it good? Well, I can't answer yes to it. There's a lot more to it than that. But if you're trading with a very small amount of capital, then stay away from 15-minute trading, because if you're going to trade seriously, you need 2,000. If you're not using 2,000 quid, because you need that for the margins on the brokerages. So if you're using 1,000 or 500 pounds, then you're very limited to what you can do. 5-minute trading is probably all you can do. And right, the reason I'm saying this is because we're doing full-blown £1 per pip. We're not using lots. Don't use that crap. We don't need to. We're in the UK. We can get direct access to markets, direct correlations. So we don't use lots at all. We use spread accounts or CFDs. But if you've got a small account under 2K, then if you're under 1K, then into 5-minute trading. So, and you're kind of asking all the questions that we train. So, I think on the website there is some 5-minute scalping videos. If you go and have a look at the 5-minute frackers, you could trade a small account with 5-minute fractals, and you can use the 5-minute bars with 9 EMAs, which I've not got around to doing the videos because I spend my time trading and my time mentoring. It's a real trading room with real traders. So I'm not sat there twiddling my thumbs looking at the next fake video to do, to publish on YouTube to get loads of subscribers. We do this for a living. We earn a living out of doing this. So we come in here, we trade, and then I help people to get better and improve. And but there are things that I would like to help people on YouTube who are interested in some of the techniques to extend profits using the power of 9, or to actually trade into 5 minutes using fractals or 5-minute hiking candles. There are strategies along that as well we can use. And yeah, let's get into the gold and see what we can do. Right. Ideally, the market would have come down to 4,000 levels. It didn't quite come down there. The market's quite bullish. So all the way down from 1 day down to 15 minutes, the trend is positive. We've also got price action positive. So we're all ticking everything up really, really good. And gold hidden is one of the assets that lends itself very, very well to a small account because it's very cheap. It's a 4,000 pip account and it costs next to nothing to trade gold from a margin perspective. So using 5-minute candles, I will get them over. I will do it over the weekend. And Hayden, if you keep in touch, remind me by putting a comment in the comments on the live if you would, and I'll give you a heads up or whatever your contact details are when I put the 5-minute strat up. If it's going to help you, then I'll make sure that you can, I'll let you know when it's out, and then you can have a look at it. But 5-minute fracs, 5-minute candle trading would be good. We're in 15 minutes here and got some really nice flat bottoms there going up, but market rejecting to 440. If you remember, day before yesterday on here, this is another thing you could use hidden. I don't know why people don't get this. Is on my website. It's inside my room. Everyone gets this anywhere, but it's outside of the room. I let people have it, and it's £10 a month. It's what's that? £2.50. £2.50 a week. It's been published every day since beginning of April. It's lost 1 day. And from my perspective, if I was learning to trade or I could trade and wanted a bit of heads up for market intelligence, wanted to know whether the market's going to go long, going to go short, where all the pivots are, what are the summary highlights, and I can do my own research. Where's all the significant events today? Where's all the key things to look at? And what's happening in the market? Where's the super high probability trades? And where do I get in? Where do I get out? Give me some guidance. It's invaluable. I don't know why every trader doesn't have this. It's I was ranting this morning about it. I rant it all the time, and I'm thinking if and I do I even publish the headline on YouTube every single morning on YouTube in the posts, give you the market sentiment, some links to have a look at, whether the market was up or down, where's all the pivots in the market, just the first page of 6 or 7 that go out completely free. And I don't think even anyone looks at the posts on YouTube, but try it once. Try it once, and if you don't like it, I'll give you money back. It's ridiculous. It's so bloody good. I don't know why. We only have 5-star reviews for this. It's on my, I'm saying 5-star review. I think it's only 5-star reviews. I can feel myself jumping on my orange crate again. But some people you just can't help, I think, and most of those are people that are cruising for trying to be a millionaire overnight. Doesn't happen. Oh yeah, I will be doing a 20% off on the full trader memberships and in Black Friday coming up. Here we are. This is it. Indicators and news. There we are. The news. Daily Edge. If it works. So it's just market intelligence using AI. I use an AGI that I've developed. It goes and looks at over 100, actually 160 different points every single morning. It gathers all the intelligence from what's happened overnight everywhere, including Bloomberg, Reuters, Market Watch, you name it, cover them all. And then I ask it within the argument to find a correlation from 3 separate points that actually put forward what is the general consensus around the world and all the best analysts and best companies. What is going to, oh, there we are, Alan 59. Cheers, Alan. You've done it. Very informative and interesting read every morning. Cheers, Alan. It is very, very good. So it then gives me these are all the top trades the world thinks are really, really good. And then I put my experience, for it's worth 20 odd years on it, 25 years plus, and I look at every single one, technically what's going to happen. And I give people the heads up, where to get in, where to get out, what's going to happen, where the market should go to, where we should buy from. Look at the fibbles. And it tells you in excruciating detail what's going to happen. And then obviously you can't hide behind it because I publish it and it actually works every single day. It's very rare that we get it wrong. It's not me on my own. I use artificial intelligence to gather it and then I hone it in to make it really worthwhile. 'Cause I use this to make a living, and the guys in my room use this. So we've had a few people. That might be. I don't know if that's Alan. Is it? Is that you? I don't know. There's a few people. There's a few Alans who've gotten here, and people who have already tried it. And there's quite a lot more reviews on what they've done. And something, as I say, sometimes you just can't help people. You give them, you have a private trading room, which people can join if they're serious about trading, but try and help people. People don't want to be helped. But there we are. There it is, a daily edge. Use it. It's a tool. Use it every single day. Get sent out at 7:30 or before every single morning to your inbox. So yeah, cheers on. It's nice to actually get some feedback from someone live that's actually using it. Don't listen to me. I wrote it. It does work. I've got robots, and after all my waffling, I've got robots that have jumped in. These are the fractal robots. And they trade the market for us, and they have traded 9 times. How many times have they traded? What were they saying this morning, guys? Gold. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Gold bots have traded 14 times today and won 11. That's not bad. Not bad at all. And they're risking 2%. So we're not doing too bad. Last gold trade failed, but that was a manual one. And let's get in, see if we can do something live just to prove to you that these things work. In fact, I don't know if I've filled all my cash up or not. Did we have that? The max win wasn't doing particularly. What was doing well? What's the last one that we did? Was it 2.2? Version 2.2. I'll show you one of these bots on 5 minutes. They run on 5-minute structure. I wonder if it'll do it live. Run the units in, run the bot up. Gold bot, there are quite a lot of bots, 113. I write AI bots all the time. It's obviously the professional trader. You want to have tools to trade all the time to help you do. And if you can't trade all the markets at once. And our aim is to make well over 1% a day every day, and we do that generally. And it's hard to trade that on your own. So you can put the artificial intelligence into some code and make sure that as far as practical, it can trade for you. And so while I'm waffling and talking, I've got my little helpers here trading, and here's one of them. I think, can I do it for real time? Friday. Can I do it for the year? Can I get it back to that far? Well, yeah, well, to the second. Right, I'll just run that. It's running the robot now. That was pretty quick. And that particular one, dashboard, 64% hit rate, leaving it on. I think the 15-minute ones were running at 80. These 5-minute ones, you're supposed to put them on and off, on and off. But even if you leave them on all the time, which I suggest you do not do, they still perform reasonably okay. So that one's up 89%. this year, 8-9% bank. So if you had £1,000 in, then you'd have 1,890 so far. Right, I'm going to stop doing that on the bots because it's not interesting to anyone other than those that like algorithmic trading. And we do a lot of that here. Right, okay. So both of them are in the money now. Let's 5 minutes and see what the bots are. Right, okay. See what the bots have spotted. So the bots have spotted a breakup of the 9 EMA here. And as the markets come back down to the value, they've entered straight on the close. So exactly, more or less, on point, within 0.01 of a pip of each other. So they've spotted it. So into the 5 minutes. So there's a few things we can do here. In the room, guys, do you want to trade gold again? If you, sorry, Hayden, I will join your room as soon as I'm from a third world country, have a little capital plus a family. All right. Well, I would say don't come in the room, Hayden. You're better off looking after your family than trying to put money into trading, or just keep your. Hi, Dave. I would say don't join my room. Get the free stuff, 15-minute bar, look at my fractal trading and concentrate on honing your skills on 5 minutes. And, and when you get confident over a period of time, then you might want to think of a little bit more support. But I wouldn't go spending your money into a trading room when it might not be the best thing to actually do. But, I can't tell people what to do, but there's plenty of stuff on my YouTube channel to help people. I'll try and put some more 5-minute stuff out. So 5 minutes is a fractal here. One thing I would say to people, if you haven't got a fractal tool, again, you need your head read. It's my fractals, not Bill Williams. I did them. Bill Williams runs on a 5-point simulation. That doesn't work in today's high-speed trading and or with Heiken Ashes. I use a 3-point on and it works incredibly well, the fractals. Let's see the fractal breakouts here. So we can either do a fractal breakout in the 5 minute or we can do a 5-minute bar. It is the same thing here. 5-minute bar breaking above the 9 EMA. And we can go with, or you can just do a manual trade. You can see where the bot's gone in. That's what the bot thinks. And that bot is being simulated for 200,000 trades over 2 years, coming up for the 3rd year now. And it wins incredibly well. That's on 5 minute. We should do a 15-minute one to show people. Anyone interested in see 15-minute sims, 15-minute bot? Right. Well, there's no point really. There's no point because there's no one outside my room can get hold of these. They're only from my traders. So no point in doing that. Guys in the room, so for instance, Simon and Paul, who have got the gold bots. Right. So I'll stop waffling. We'll trade. 5-minute fracker now, so I don't miss it. So people know in the room I do talk a little bit. So 0.3 and 0.3, which is the spread. It's 0.5 at the moment. So we need 10.5 and 10.5. We're going for a breakup of 10.5 and 10.5. A little bit lower down, the bots have said that is 9 and 9. That's the simulated trade. That's the stops based from simulations and also for actuals. So the market's up 3. It's up a third of the way at the moment. We'll put a 5-minute fractal break on here and we'll have to watch this. So we're going to put a fracker on here. And the actual bar is roughly here, 27.4. I want to put 0.5. We'll 0.5 on that as a break up. So we'll round that number up to 28, and that gives us that swing low stop here, and that's absolutely fine. We want to be careful of this top fractal here, and it's coming right up. We're going to have to break a new. Is that a new daily high here? Yes, it'll be a new daily high for gold for today. So 5-minute fractal here, stop is under the swing low. So a 5-minute bar stops under the swing low. A 5-minute fractal stops under the fractal, or a 15-minute bar if you want to wait for a 15-minute bar, but that's not done just yet. Here, ain't going nowhere. I'll definitely wait. Your 5-minute strategy. Thanks a lot. No problem. I stream on YouTube for one reason only, not subscribers. But if you have subscribed, if you haven't subscribed, then please do subscribe, because my channel has been chosen as one of the top channels for going live because of the way we present and the way we're open. YouTube have asked me to do more live events, and they'll promote them on podcasts and on YouTube Music as well. So the channel's getting a lot of interest. So Dave Brooks, so Bill Williams, 5-minute fractals don't work. I'm not saying that they don't work, they just don't work anywhere near as well as my fractals, the 3-point fractals and Icon candles. They do work a bit better than 50%. I've back tested them all. So they work more often than they fail. But my fractals are 70%, 80% plus. So if I'm going to choose a fractal and I want to make money, I would use my 3-point with Icon, not Bill Williams, because I know the work a lot better, can prove it. Yeah, someone's got to do it first of all, haven't they? Someone's got to design stuff. It's very, very rare there's someone that comes out with something brand new. It's always built on something, just like the what was the latest craze on YouTube? It was a load of crap. Was it you that Sam told me what's going on YouTube? They're all claiming
it's the orb strategy.
Yeah,
Oh,
the orb. Yeah.
yeah, that crap. Yeah, the orb strategy. A raw bot tested it, and it works about 57% of the time, which I suppose is okay. I got hold of the orb strategy and tweaked it with my fractals, and I got it to 87% hit rate. And they're quite interesting. It was made back and designed in the 1960s. And it's been iterated and iterated. And it's now iterated and now proven when you do the model with the size of today's markets and the way they are traded in a much higher frequency and volume through algorithmic trading and everyone being online, not on a trading floor on telephones. Completely different scenario now. Trading floor has anyone from the trading floor has no value in today's society on experience, because it's not a trading floor anymore. The trading floor is all your computers and algos and the like. The best time frame to trade an orb in, and the orb's 30 minutes. Do not believe anything you see on YouTube with the 30-minute orb. Please do not use it. You'll lose money. A lot of the YouTubers are just doing this to try and get subscribers. Please, I don't, if you subscribe to my channel, it means that you'll get heads up to all my latest videos that are not there to screw money out of you, they're there to help. So if I do new lives, I said I'm going to do podcasts about, I don't know what we're going to call them. We could call them jibber jabber hours once a week. And we'll just go on live for an hour or two and talk about trading, answer any questions that people have got, do a wee bit of trading for real with real money. And I've been encouraged by YouTube to try and do that because they want me to do this. It's quite nice of being asked to do this. And we're getting inundated with sponsorship deals to everyone for me to talk about their product, which we're not going to. We're here to trade, not to push products. So the orb, to go back to the orb, the best time frame to trade an orb is 1 hour. So that's not the opening 30-minute range then. So it's no longer the orb. The hour is something called the IB, the initial balance. So if you're going to take the first breakout in the markets, you're better off taking the orb 30 minutes with 1 minute frackers. That's the way to do it, or a 5-minute bar on a breakout. 5-minute I can actually bar or a 1 minute fracker on the first 30 minutes, and you improve no end. I suppose I could do a video on that. I've got robots to do it to prove it works. The other thing is use the IB strategy, the initial balance. Take the first hour of the market and trade with the trend. And the trend, of course, is using the 200 EMA. And the perfect storm, of course, go with the breakout, with the trend, and make sure your price action follows your trend. In other words, if you're going long, you've got to be trading above the 9 EMA as well as the rest of it. The initial balance out and away, and you've got very high probability trades. The issue is you've got to be patient, wait for it to set up. I made a variant of your 15-minute bar strategy. It's the same, except I used 2-hour MACD for trend buys. Well, it's not a 15-minute bar strategy then, is it? But one thing I will say is take a concept that works and enhance it, make it your own. Don't detract from it. There's 1,000 ways, probably more, to make money consistently. In my trading room, and if I'm a kind of educator trying to help people and show people, what do I choose to make people consistently profitable? You've got to have a set of things you hold to be true as a trader, and a core competency you need to grow as a trader. So there's probably 1,000 things out there that'll work. And you'll say, I do this, and I'll say, well, I do this. It's completely different. Doesn't mean to say you're wrong and they're right, and vice versa. It just means to say you have a system that you're confident in and that it meets your requirements and you can make money. So that's the best system. What I'm offering is opportunities to trade with the trend, against the trend, go sideways, market function, and events, and how to trade market events. So the dividend trade on a Wednesday with the FTSE, the options expiry, the FTSE for 5 minutes on a Friday afternoon, the non-farm payrolls for up to, last time we won it with 3-second trade, and it can take up to an hour, but generally the first sort of 3 to 10 seconds wins the day. So there's strategies for events, strategies for market function, strategies for reverting back with the trend. So in the market, the trend's going up. I'll draw a pen. And I've been doing this now for nearly 28 years, and the things that I teach on use are the things that I like and work for me. It might not work, well, it'll work for everybody if you follow what we say, but and it's crazy. It's the only people that follow what you say, and this won't make me popular, are best traders are the ones that don't come on very often or follow you. It's women. Women make better traders than men, or men that have never traded before. Because a woman will always look at the manual, will read the strategy, and then do it. Whereas a man always knows better. They pick what you do and make a variant of it because they always know better. They don't just say, all right, I'll try that, knowing that it works, it's proven that it works, and do it. So what happens in the room when women come on, they always make more money than the men do, and they keep more consistent. And what generally happens, the master loses a certain amount of money before he listens, saying, all right, I'll try that. And that's what happens. Or someone who wants to trade, who's not been influenced by other rooms and crap on YouTube, that actually do listen. And yeah, so I'm on me rant again. But there we go. But it's true. Women make really good traders, but not very many women trade. And I don't know why. I don't know why, because they do make very good traders. So say the trend's going up like this, what we teach is as the market comes down against the trend, we teach variance on how to go back with the trend. And if we're on the trend, how to get little bite-sized nibbles all the way up. We also trade if there's a spike, how to get into this trend. If there's a big ATR move, how to trade an ATR move. So if the market is going with the trend, trend is your friend, trade with the friend, trade the trend, trade a reversal back up, a reversal back up, a reversal back up, a fractal break, a market function drop on a spike into pivots, so the C-ball daily pivot. If you trade cash markets and you don't use pivots, and you'll find it very difficult to be a successful trader. Need to know where the pivots are in the market. And I'm ranting, I don't mean to. But there are lots of ways to trade well. I teach a few, and I've got probably about 15 plus different types of strategies. It's like when you have to repair a car or do anything like that. You don't just have one spanner that fixes everything. You have all different size, ring keys, open enders, Stilsons, grips, you name it, all different tools for doing different things. And in trading, you need to understand what suits your personality, how much time you've got a day. Do I just want to keep going with the trend over a long time, or can I scalp the trend? Am I interested in extending a trend, and what strategy can I use to extend and stretch? Do I just want to trade events, economic events? Do I want to trade market function? For instance, the FTSE sometimes pays out 10 pips to 30 pip dividend. So whatever you've got in the market at 29 minutes and 59 seconds in the market, if it's a 10 pip, if it's a 10 pip div, you get a 10x paid directly into your account. If it's 30 pips, you get 30x. It's the easiest 1 second trade in your life. We have functions around that. We've got EOD functions, end of day, and EOM, end of month, triple witching, which is end of quarter. And markets move in certain ways because all these different events have options behind them as well, which may be daily options, monthly options, and quarterly options. And when they all come and expire at a certain time on a certain day, on a particular day, it causes massive amounts of unsettlement into the market. And we trade and know how to trade that. We know exactly every single event in the indice market, what happens, and we take advantage of it because it causes uncertainty. It causes market movement. You only make money when the market moves. So when you need to have strategies that help you move, help you trade in the market and help the market run. So anyway, I'll shut up a bit, but I hope that all makes sense. But it's not good just waltzing up to a market and trading the market. You've got to know where the volatility is and when to trade it. So for instance, when people say, oh yeah, I've traded American markets, loads of volatile. Rubbish. The biggest volatility is in the Northern European market, not the American market. The most money to be made is generally from 5 o'clock, 5:30 in the morning till about 9. Asia Pacific market all closes. The Northern European market opens, which is significantly bigger than the American market. The American market is an adjunct onto the afternoon, and it helps support certain things. Anything with the US dollar, if you're doing a forex trade, you help a little bit of volatility in the afternoon. For example, don't believe it, measure it. So at 5 o'clock, we'd have a nice little run. What was that? 30 pip move. American market, what happened? American markets opened, did nothing. It's come back a wee bit. It's come up back 17. If you want to trade gold Okay, trade in the afternoon a little bit. You can always make money. But if you're gonna, the windows that you want to trade are 5 o'clock in the morning through about 9 in the Northern European market, and that's for the DAX, the CAC, the FTSE, or major indices. But also, if you trade in the FTSE, you can trade the futures on the Nasdaq as well, because you'll find that the Nasdaq in the futures market follows the FTSE, so you can trade that as well. In the morning, oil and gold is really, really good. Really, really good. You get a big market moves. Once it gets to 9:30 in the morning, got that lull till 9:30 to 10:30. So you go for a cup of coffee, kick the dog, walk the dog, do whatever you want, go to the gym, and then back on the market starts to pick up. And UK 3 p.m., which is half an hour after the American market opens, you get more volatility running into the afternoon, so you get a bit more volatility then. You also get volatility in UK time frame around about 7:30, 8:30. The reason for that is the traders in America go for lunch and they come back and want to start trading, and that causes more volatility as well. And then on the last hour on a Friday, always if you're able to, what UTC are you in? Great, it's confused with the times. Right. The whole world runs around general mean time in trading. Everything's a time away from GMT. So wherever you are, you have a clock and runs from GMT. So we run GMT. So I always talk GMT all the time, even though I'm not in the UK all the time, sometimes in Spain. I make sure everything follows GMT. So we one of those things you hold to be true. Have your timestamp, know when the times are. So when I speak, it's always GMT, even when I'm in a different country, because you need to get that in your mind where the things move. So from a UK point of view, the American clocks are out of sync with the rest of the world at the moment. Everything changed last week, and the Americans catch up this week. So from next week's point of view, the Northern European market opens at 8 o'clock with a pre-cash market opening at 7. And that's when we do the early bird trades for the indices. And then in the afternoons, the American markets open at 2:30 GMT with a 1:30 pre-market trade. And there is a very tasty trade on 1:30, a fractal break or a 15-minute bar for the US tech with the trend, and that can be took every single day. But there are lots and lots of things to trade. Lots of things to trade. I'm just honing in and providing a few tools and a few ideas to trade the style that we trade in. And it's not to say there's lots of other styles that are equally effective. How equally effective they are, I don't know. I don't subscribe to swing trading. I'm not going to sit and wait for 1% over the period of 3 or 4 days or longer. I want my 1% a day or more. So the strategies that I'm focused on is getting into the market precisely and then getting out. Stop holding things you don't need to. We've had targets that people say, oh yeah, I'm going for a target that is whatever over 3 days. Yesterday we were in 9 times. Today we've been in nearly 9 times. Well, someone's waiting for the 1 or 2%. We've made 18. Thing you've got to do with day trading, especially in my room with my guys, I'll tell you, is you got to have absolute discipline, lack of emotion, trust in the trade, wait for the setup, and execute it unemotionally. If you fail, doesn't matter. All the trades we've got are 70% and higher probability of winning. If you were actually told, if you're in a gambling casino, for instance, is every 10 times you roll the dice, you're going to win 7, you'd take that every day. So why wouldn't you as a trader? Play the statistics. Even the best setups in the world fail because you do not know what's going to happen. because you're not trading candles, you're not trading all this, technical shit really. This is just a result of people's decision making. What you're trading are people's emotions, people's thoughts, and people's feelings that shorting them, selling the market or buying the market. And then there's always some smart ass that says, oh yeah, well, it's algorithmic trading. Who the hell do you think builds algorithms? It's humans. And all that bias gets built into the market. So one of the interesting documents, and I'll show you, it's one of the least downloaded documents and the most important document that I've got that's free. No one downloads it. And it just is quite a really good indication of what people are looking. They're looking for the golden goose. They're looking for I think that's been downloaded 1,400 times, something like that. People are interested in the next hot strategy, blah, 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 let's do it. Are they interested in why people fail? No, because they always know better. Do they blow the bank up? Quite regularly. That's the most important document. And I think it's got about 20 or 30 downloads. The most important thing as a trader, and especially a day trader, is to really get in touch with the emotional intelligence. Your emotions are king. The ability for you to train yourself to stop losing money, to spot where the trades are, to have the discipline to wait and execute a high probability trade. It's free. Just go and, well, get hold of the document. It's free. It's not going to kill you. Get it for nothing, giving it away for free, and use it. And then tell me on Tuesday when we're streaming live again, or Friday, if you think it's any good, if you think it helps you. If it doesn't help you, then I'll modify it until it does. But, cracking document. Get in touch with, your emotional discipline, a better word, really. Oh, I've talked and talked and talked as per normal. Sorry, guys. I get all my room's quiet, thinking here he goes again on his flipping orange crate. Sorry. So, things you want to do, get me your emotional intelligence. If you haven't got the 15-minute bar document, please get it. Please get it. It will help you, and it costs nothing. The emotional intelligence costs nothing. Get a hold of the Daily Edge. That does cost something, but it's only £2.50 a week for the opportunity to keep up to speed with what's happening in the markets and give yourself half a chance at finding the right trade. Yeah. All I can do is lead you to the right document, so I can't help you do the trade. We've got a lot of screeners here as well that tells us where all the trades are. Rowan, mate, Nasdaq is trending for 3 hours. Why stay on gold? It's choppy. Well, you make money on chop. That's where a professional trader would be. You're not going to sit and ride the kids slide. You want to get in and out. We've traded 9 times on gold, made 18%. Why would I want to sit on the Nasdaq for 1 or 2? You don't. I'll show you where the Nasdaq. I'll give you a tip on the Nasdaq.
Alert triggered.
15-minute bar at the open is great.
Alert triggered.
We don't trade the Nasdaq. We only have one specific trade that we trade 130 and trade the trend. If the Nasdaq is your cup of tea, go and trade it and make a lot more money in other places. You can make a lot more money out of gold than you ever will in the Nas, given the strategies that we use. So all these things you can figure for the bots. So there's a bot, and that tells you when to put the bots on. You click that, and it tells you you are red on the 1 hour. Is it 1 hour? Yeah, perfect setup. It immediately tells me that crude's overcooked, and you can see it is. Brent, it's telling me the same thing on that. If I want a perfect setup for a perfect long, it tells me which are the perfect longs to have a crack at. There they all are. If I want a perfect short, that tells me where all the shorts are. Funny enough, if I want to do an MTF, multi-time frame trade, I use my 4 filter, and we have the nursery rhyme to trade 1 filter, 2 filter, 3 filter, 4, and we have the filters there. I've got 7 trades going potentially to go long, and we have the Renko blocks here. So if we are going long, we want a green block, and at the moment, no. And then we want to be trading above the 20 EMA on the 4 hour, and that is yes. On the 1 hour, no. So this is not flipping good wherever this one is. UK, obviously it's going down. So if we hit hit Wall, there's the Wall Street one there. Let's hit Wall Street. Wall Street has had a bit of a pullback. It's on a red block, but marginal, just yes. And there's a signal, but we've not got 4 filters yet, so you wouldn't go long. And if you remember, that's the breakout that we were looking for before. If we pull the NAS up, Tech 100, there we are, Tech 100. There we go. 1 filter, yes. 2 filters, yes. 3 filters, yes. 4 filters, yes. So the Nasdaq has been long from 230. The last time it went long was from 8 o'clock, 8:15 yesterday. So it hasn't been trending for 3 hours. It's had a run up and it's gone sideways. Then the market's dropped and now it's running back up again. So yeah, you can do this. We'll put the NAS up and I'll show you the NAS. I'll show you the trade on the NAS if you want to do it and practice it and play with it. 15 minutes. There we are. So there's 15 minutes. So what you want to be looking at on the Icon bar, and it doesn't matter on the color. You wait for the open, which today is 130. So you're looking at the 130 bar, which is here, which closes at 145. So what you're looking at here is you're going trading with the trend. The trend is up. So the trade is a break of that 15-minute action on the NAS. So it's a break above here, and your stop is under that bar. So there's your risk reward. Where's no, so that's wrong, isn't it? Is that the bar? That's the bar there. That's the bar there. So that is your trade for a 1-to-1 risk reward. And the way I'm looking at this, that's an easy 1-to-1 risk reward. Sometimes you get a continued break up here, but don't take my word for it. Don't take my word for it. Do it yourself and then tell me I'm wrong. Don't take my word for it. Test it. And then come and tell me it works or it doesn't. And if it doesn't work, as I've explained it, it just means I've explained it wrong to you, and I'll have a go at helping it go around to the right way, because that's what we're here for. So that particular trade, that's a 81 pip trade, and it's going back with the trend. So the spread to 83 pips you would want on that, and I'll put it in. This is recorded, so you'll be able to see this. If you watch it later, then come and tell me we're wrong. We're doing a break of that bar here. So 48, 26, 48, 26, we'll round that to 14, 26 or 49. And we'll go for that 1-to-1. And there you are. It's all recorded. Doing it live, trading live and real money. Have a go. Paper trade it. Don't believe what I tell you. I'm just a YouTuber. Really cool way of trading. Thanks, Wildly. I'm on shorts with the 40. What do you think? I think you're absolutely spot on. Our targets have already been hit. So if you get a daily edge, you would have spotted this morning and made a killing. Where we are. Where are we? Short. So the short was close the gap and then ideally go up, but we're going down, heading to CBOS area as a short. So I keep coming up with the daily edge. It's all written down day by day by day. Just flipping works. So I don't know why people don't get it. Want to help people, but yeah, not everyone can be helped or want to be helped. But there again, all us traders always know better, don't we? So, right, now this is the area that we want to be thinking of buying into widely. So the idea this morning, what we did, we traded the gap going up into the close, and then said the market would come down into CBOS area. It's broken CBOS, it's come all the way down. The DAX, as I explained, you might not have been in the room earlier, it has a high tendency to spike into a key area. It'll have a spike leg, and it will nearly always have a retrace back of over 50%. You can take it to the bank, usually 61, but there's a spike, 100% retrace. Spike down, 100% retrace. Spike down, 100% retrace. Spike down, 100% retrace. 100% retrace. Well over 100 each one of those. Look at that one, absolute monster. And again, this one hasn't finished. It's got 7 minutes yet. It's not a really big spike leg, but if you come down into the levels here, you can see exactly what's happening. We are negative. One of the things that you can take, not to the bank, don't take my word for it, watch it. Don't just sit in the room and watch me waffle and go on. This is real trading. If you want to make some real money, you need to listen to what we're saying and test it. And if it works for you, adopt it. If it doesn't work for you, do something else. But we've got a 4 hour, I'll show you, right out. So we've got 4 hour resistance here. And if the market, and I said this morning, and I said it when we opened, and you kind of saying it again, if the market comes down here, that was the alert. I said around about 23,950, the market would come down into this area. We want to be alerted because we want to then trade this. We want to trade the bounce. The good thing about the bounce is it's a Friday, it's an EOM day, and we're quite likely for the market to rise heavily over the weekend, round about 100, 130 pips at least. But when you see this action, you probably can get a 50% retrace, probably can get, we'll have to measure it in a minute, but you probably can get in and out of the DAX now before it then gets pulled down by the American market selling off and the FTSE selling off into the close. So let's have a quick look at this bar here. This with a retest here. Ideally, you want your stop under this hole here in the market from the 20th of October. And actually, there's a wall trade there to be had, but a bit late in the day to have that. That's an S3. So you can either trade the bottom, and you'll need to use a 15-minute logic for the stop, or you can just jump into the market now with this swing low under here. So you're looking at about 158 pips, something like that, and you want to go probably back up to this area here, which is the 200 EMA. So at the moment, you've got a one-to-one risk-reward potential trade. If you want to trade that, we've done really well already, so we don't need to. We traded the close going up and we traded it going down. It's done exactly what we want it to do. But again, like, don't take my word for it. Take a screenshot, watch the video, and then come back and say, oh, we did that wrong, or it worked and thank you and whatever. We're here to learn how to trade. Not show off or not do anything, just to trade, how to read the markets. And I'll do a few sessions on that, how to read the candles, how to read the trend as opposed to reading price action, how to make sure you can read them so they both go together with a pivot, to stack the probability in your favor. That's what it's all about. And so we've got double tap reversal on the 15-minute here. We've got a 15-minute bar. It's not a 15-minute bar reversal because a 15-minute bar reversal, as Wiley points out, is short today, not long. But we're banking on this going up. But we're banking on this going up. So we know that the tech is probably going to go up today on the back of AI and the back of NVIDIA. We know that the S&P always likes to have a nice little rah-rah. The Dow's already gone up, and it's blowing out of the areas that we mentioned it would do for doing a long trade. If you want to trade the Dow, it's blowing out of that resistance area that we identified here. So if you want to trade this, there's the 5-minute fracker that I did mention. Need a 5-minute fractal above here, and there is your trade on the Dow, a 1-to-1 risk-reward ratio. And you probably could go quite a lot further. Well, this really, you know, I would think will be this is a trade. This is a short later on today, so I expect a short squeeze into Camarilla breakout long, probably short squeeze into Camarilla breakout long, and then start looking at quarter to the close. So in UK time frames, that will be 7:45. And if you can hold your nerve, wait till 5-2, look for a reversal like an Ashley bar and short the backside of it. Yeah, it's a market function. Happens every single month. Again, don't take my word for it. Watch it. So, expecting this to go up on a run, and it's recorded this. So you can go back and look at it tomorrow. S&P. What's happening? S&P. So we were trying to short the S&P. That's what we're trying to do, try to short the S&P. We had a problem, as Becky pointed out, that we've got the daily pivot in front of us. We've got a hole here. I pointed out that what might happen is that the bigger traders, larger traders with money that can move the markets, they do trade pivots. Is a great example here live. They are trading the Camarilla breakout long. The issue that we've got here now is we've got a big indecision bar here, and we can see on an unbalanced volume is running up. We've got a 926 cross about to happen as well, and we've got a 5-minute fractal forming there. Do we bug out and admit we got it wrong, because it's quite clearly we've got that trade wrong? It's the end of the month. It's probably going to get squeezed up and then sold off. So, or is this a mere pullback? Can do a few tests, we can do a fibbo, and we could draw a line in the sand here with a 61.8% reversal here. Will the market reject there? Do we really want to do a 5-minute fracker break? Or is this just going to come, is it going to come screaming, the market's come down, is it then going to pull back before it continues down on its next leg and then down into the end of the evening? We do not know what's going to happen. What we do know, we can see a fractal formation starting with a leg up here, and the staircase, like the staircase coming down here, is starting to go up. Do we take that break up? We're looking at the price action here on 5 minutes, and the candle bodies again, there's less and less people that have got the appetite to go long, and that's manifesting itself in these very small candle bodies here. So we've got a sign that the market's weak, but the price action is positive and it's in line with the trend. On a 15-minute, we're with the trend. and we're price positive. Let's get rid of this for one moment. We've got some big rejection bars below C-ball, but then we've got some rejection bars going to the top side as well. So it's quite balanced, this. Do we stay in this mark? Do we stay in here until we get stopped and then look for a break to the top side? The way I'm looking at the moment, we can see the market staircase is coming down here with a flat bottom. Are we going to get the market? Where's my pen? Are we going to put another fractal in here for the market then to come down? Or are we going to put a fractal in here for the market to go up? At the moment, the bulls have it here at the moment, but it's indecision. We've got the C-ball guys protecting that pivot, and we're going to have the pivot guys wanting to buy here as well. So this is the kind of times when the markets, you got some indecision in the market, and you've got to weigh up what's going on. And at the moment, we are price positive. The unbalanced volume indicator, that's another thing that I've written, is saying on balance, the market's going to the top side on the 5 minute. And oh, have I got a comment? Yeah, S&P, yeah, it has, yeah. It's been defended, isn't it? You're absolutely dead right, Paul. Yeah, it's been defended. It's a pain in the ass. It should come down. Futures market did close here, and now people are trying to buy. All the Mickey Longs are all trying to buy. We could bug out for 0.5% loss, but this price action looks like it's actually faltering. The issue here is, of course, if we have a breakout, it'll then accelerate to the top side because people will get the confidence that the market's been bullish after the indecision with small candles. But again, you've got to be patient. My tendency looking at this would be to take a fractal breakout long and cover this off with a fractal up until you get closed, or have a 0.5% risk with a fractal break out in case it reverses and comes back down and you lose 0.5%. But to me, that looks like it's weakening. But only time will tell. And I've run out of time. We're back on again in half an hour to short the backside of the FTSE. FTSE. Is the FTSE worth shorting? Oh, once that's called FTSE. Bugger. Horrible. We want this market up so we can short it. While it's under camera breakout short, then it's liable to continue in the same direction. However, it still sat on a lot of profit. So the opportunity still is for the market to go shorter. Realistically, can I turn all this rubbish off? So, we are trading, obviously positive on the 4 hour, and we're trading under the 9 EMA, so it's negative. This market could really come off, couldn't it? Still, from this level, there's an awful lot of profit on the table to be took off. And how far are we away from these levels? There's still a bit of meat on the bone, isn't there? Where's my ruler? 17 pips. The ATR is 12. So they've got a full ATR move down here. The 4 hour doesn't stop until all the way down here, bro. There's no way the FTSE will run the 5 day ATR. In other words, the average true range in 5 days is a 78-point move. So I can't see that moving. We could see the market come down into these levels. Is there a pivot there that we could focus on? There's a DS3. Pivots are the ATRs always measured from the pivot. So the daily pivot there, the average is 78. You can look at the market on average. Well, it could come into here, but there's nothing average at all about end of month. So it could run a little bit more than the 78 pip ATR to the downside, and to the upside, it's done nothing. It hasn't even, the closing gap still hasn't been done. The good thing for the guys in the room, guys, for Monday, that's going to be a really hot trade on Monday to trade up. So there's some nice rupees to be had on Monday. But for today, I think I'm going to my voice is going. I think I'm going to call it, and then I'm going to come back on. So it's 7 minutes past 3. Probably come up 3:45, because as you know, the EOQ scenario happens at around about 4 o'clock. But if you're coming at 3:45, if anyone in my room's interested, I will be going live. I will be trading it myself, so I'll be trading here anyway. So if you want me to open the room up, I will. And there's anyone that's left in the room want to trade the the end of the Friday? Yeah.
Yeah.
Yeah. All right. Yeah, fair dues. Yeah, we'll do that. Hopefully, we'll get a little bit of a run up. Market will try and push up and get as much value as possible, and then smack it down. There's 5% to come off, 4% to come off, and we've got I would say that'll be my target. There's a bullseye. I guess for the Clint Eastwood traders, and wildly, that's on the DAX, not this. If you want to try and just get a one-to-one, is it better than a one-to-one there? But that's assuming the market sells off. But it is end of month and it is a Friday. You could get a cheeky 1.5% straight into there. But let's follow the strategy. Let's follow some rules. Back on at 3:45, guys. I'm going to go and get a cup of tea for the guys on YouTube. Thanks for following. Get the emotional intelligence downloaded. Get the 15-minute bar loaded, and get yourself the daily edge. And then give us some feedback on the daily edge. Just there was what else? Who was saying who used it? It was Alan, wasn't it? There's some independence there. All the guys in the room think it's really good. I will get my friends to buy a daily edge. Well, thank you. As long as the traders, it's invaluable. I don't know what to say. It's but one bad day since April. You would think everyone would go ballistic over it. The daily edge is going to the daily edge is going to change for the better, actually. The focus, where did I write all this down? The focus for me is about making money, not informing people. How accurate is it, though? Flipping it, don't you listen? It's lost 1 day since April. I would say 99% something like that. But there's no accounting for the people that use it. So from Monday, the daily edge is going to focus very, very tightly on the FTSE, the DAX, the S&P, and gold as a core competency for ripping 1% out of, so that's 4% a day we're going for there, plus anything else we can find. It is also going to give a dialogue on the Magnificent Seven. So I'll put this, I'll show you what it's going to do on Monday. I'll finish the coding for it. So as well as doing the what we want to do on the core competency, in other words, let's try and get 4% a day. That would be good. Once we've got the core, we're going to choose the two high probability forex for the day to make money. And then we're going to have the Magnificent Seven, and I'm going to run a dialogue with no buys and sells, but a dialogue here for a day trader on the Magnificent Seven. So you can choose whatever you want, and we'll give a directional bias for that for the day. And then what else did I say we were going to finish off with? I've written it all down. And where have I put my pad? I've got scribblings everywhere. I write everything down, all the trades that we do. So can anyone remember from the room this morning? Guess no. It's bad enough me listening to myself. Nobody else listens to me. Where's it on? Is it on this pad here? So we were going to concentrate on the high probability trades. Then we're going to put a couple of FX in there. We're going to put the Magnificent Seven in. That's probably enough, isn't it? So it helps people day trade and give direction for the key big core shares. It's going to help people with the European market, the English market, gold, and the US market. As far as the comments concerned from widely, your friends use different strategies. Well, so long as we call the market going down or going up, and the reasons and rationales why, like I said before, there's 1,000 strategies that will work. So long as your friends have a strategy that works, and if we say the market's going to go down for all the reasons that we write down here, why it's going to go up and why it's going to go down, you can apply strategy to anything. But the key is getting the direction in the right place and spotting where the key numbers are. You know, we're pretty damn accurate with the numbers down to 1 decimal point and exactly where the market's going to go. You can use any strategy you want to hit that. It doesn't really matter. But the interesting thing is, the more people that use this and give me feedback on it, the better I can make it. At the moment, it's all the ramblings of a madman that's sat in front of you, saying what happens. But madman gets it right a lot more often than wrong. And you know, if you've got any ideas for changing the structure, I've now got all my AI too. Look at that, it's coming down, even already coming down. Right, okay, I'm going to go. Take care. Best of health, strength. Yeah. Cheers, guys. Thanks, everyone. I'm going to go because I'll never shut up. I'm passionate about trading, as you've probably guessed. Thanks, everyone.
Thanks, Steve.
Have a
Perfect.
great
Thank
weekend,
you.
and I'll see everyone in my room back on at 1:45. Cheers, guys. See
Cheers.
you.
Cheers, thank you.
Bye-bye.